An overall bullish bias prevailed for the US dollar last week. Investors continue to closely follow news regarding the potential timing of the reopening of the US economy, although this scenario seems depending on the particular situation of every state. The US dollar index, which tracks the greenback against a basket of its peers, edged down by 0.2% on Friday to end at 100.29, posting a 0.5% rise for the week. The greenback almost ignored another sharp surge in weekly claims on Thursday, this time by more than 4 million untaken citizens who filed for unemployment insurance benefits to around 25 million in the last 5 weeks. Meanwhile, the Euro weakened after a European Union meeting on Thursday to build a €1 trillion emergency fund fell short of satisfying investors' concerns. However, the common currency recouped some of its losses on Friday to end up by 0.4% at 1.0821. Still, for the week, the euro notched a 0.5% fall. In other economic news, the German IFO Business Climate Report came in lower than expected at 74.3. Traders were looking for a reading of 79.8. Last month, the report came in at 86.1. The data indicates that conditions are worsening in the euro area. In the meantime, the British pound traded in the green during the final 3 sessions last week. Still, that didn't prevent it from posting a 1% weekly loss. Sterling was boosted by improving global risk appetite and hopes that lockdown measures may start to be eased as the number of coronavirus cases in the UK appears to slow. UK Prime Minister Boris Johnson returned to work a month after he tested positive for COVID-19. He is expected to find a way to ease the lockdown without triggering a deadly second wave of the virus. In the crypto market, Bitcoin ended at 7,697.10 on Sunday, trading bullish for the most part of the week, with another 7.9% gain added to its value since previous Sunday. According to some technical analysts, Bitcoin price is looking like it's on the verge of a breakout according to several indicators. However, with the upcoming block reward halving and mining difficulty set to increase, it remains to be seen whether the bull market will be in place. Elsewhere in commodities, oil finished a wild and unprecedented week, which look even seasoned oil veterans by surprise. Soon to expire May contracts for West Texas Intermediate crude settled in negative territory on Monday, for the first time in history. The main reason was a fear that there would be nowhere to put it amid the lack of available storage capacity. The WTI contract for May delivery settled at negative $37.63 a barrel, sending shockwaves through the industry and across Wall Street. However, it didn't last long. By Thursday, WTI crude prices had rebounded sharply, hitting an intraday high at $18.15. Meanwhile, Brent crude settled at $25.22 on Friday, rebounding after Monday and Tuesday's steep fall. For the week, it still posted a 23.6% decline. Oil investors are facing the reality that global supply will overwhelm demand for months and years, and current production cuts to compensate this glut is far from sufficient. Meanwhile, gold futures fell by 0.5% to settle at 1,735 on Friday. For the week, it still posted a 2.1% gain. The demand for gold has been on an upswing as a hedge against a deep global recession and meltdown in some asset classes like oil. You're watching Currencies and Commodity Market Review on InstaForex TV channel, presented to you by me, Kate Stihina. We wish you profitable deals with InstaForex.